One of the things I always try to discuss with prospects or clients when discussing their homeowner's policy is the need for a personal articles floater or an inland marine policy, as it's called in the trade. There are two reasons why you would want to get an inland marine policy. The first one is if you schedule an item of value, your favorite bicycle or diamond ring or art collection, on a homeowner's policy, it gets you more perils for those specified items than you have on your regular homeowner's policy. If someone breaks into your house and steals your television set or your couch or your clothing, it's covered on hopefully a replacement cost basis. If they steal your diamond ring and your Hummel collection, those have special limits built automatically within the policy that the most the insurance company is going to pay is a few $1,000s for the theft of jewelry. If they burn up in a fire, they're covered. But if they're stolen, the special limit kicks in. So by purchasing a personal articles floater, the insurance company would pay based on the appraised value of the diamond ring, for example. So you get much broader coverage by scheduling those items. A couple of stories come to mind. A lady was doing the dishes in the sink, bumped the engagement ring setting against the sink and bent the tine so that held the stone to the ring, and the stone falls out, goes down the drain, lost in the sewer system. Was she covered? No, she did not have it scheduled on a personal articles floater that would have picked up that coverage of exactly what happened. The loosening of the stone is not a covered peril on the regular homeowner's policy, whereas if it were scheduled, it would have been covered. Another lady lost the diamond ring water skiing. The water had caused her fingers to shrink a little bit. The ring came flying off and is down at the bottom of the lake somewhere. Checked on her policy, and yes, she did have the ring scheduled. We filed a claim with the insurance company, and she was reimbursed for the loss of the ring. Had another client who bought a video camera probably 15 years ago. They were several $1,000s and pretty big and bulky. Took that down to Mexico and went parasailing. They got up to the height, taking pictures of the ocean and the hotel and the town and everything, and the tow rope breaks, casting him loose from the boat that was towing him. And he very gently settled down into the Caribbean Sea, and the camera got fried by the salt water. Any water, actually, would fry it. Was he covered? Well, the answer is no. He didn't have it scheduled on a personal articles floater, and as a result, there was no peril to hang that incidents onto. So we had the insurance company denied the claim. So you can see why, when you have a special item like that, you'd want to insure it differently. The second reason, aside from getting better or broader perils covered, you will also have a different deductible that applies on a personal articles floater. Oftentimes it's $0, so the insurance company pays the first dollar of the expense. If your homeowner's insurance deductible is $500 or $1,000, you're going to absorb the first $500 or $1,000 worth of loss before the insurance company is going to pay out any money. Whereas with a zero deductible, they pay out the first dollar expense. So a $3,500 engagement ring, the insurance company would pay the full $3,500. It's also important to mention that those articles that are scheduled are on a stated amount basis. So whatever it's appraised for is the most the insurance company is going to pay. Jewelry, for example, appreciates in value. It gets worth more as time goes by. So I usually recommend to clients to get a appraisal done on their jewelry every few years, or if they notice that the cost of Hummels rises significantly, then maybe they should get their Hummel collection reassessed. So if you do that every few years, you'll keep what the insurance company is going to pay in line with what it's insured for, what its actual value is as of this date. So that's why you would want a inland marine or personal articles floater policy uh, over and above your homeowner's policy. Some insurance companies will write it as a separate policy, which allows you the opportunity to keep track of what's covered a little bit better than if it's all lumped onto the homeowner's policy. One of my favorite stories, inland marine stories, is a very wealthy man calls up his insurance agent and says, I was up in Canada, I bought a box of Cuban cigars, brought them back into the United States, and they're very valuable, and I want to insure them. So the agent gets out and finds out what the rate is, and they're worth however many $1,000s, and it goes on the policy, pays the difference in premium, and off they go. About a month or two later, the client calls up and says, I want to report a fire. Those cigars, I smoked them, and the cigars burned up. Want to file a claim on the loss of all the cigars. So the agent dutifully writes it with files a claim with the insurance company, and the insurance company pays the claim, and then they turn around and sue the individual who had burned up the cigars, the owner of the policy, for arson. Now, I don't know if that story is true or not. It's one of those things you hear at insurance conferences, but again, a personal articles floater, you may want to consider insuring the items that you like the best in the house, insure them on a separate policy.